Okay, so now let's talk about question number 2. How is something being valued? AKA, what is the number that is presented in the financial statements? So we have 2 financial statement impacts here once again. We're primarily going to focus on the income statement impact and the balance sheet impact when it comes to intangible assets. So one of the primary valuation topics that the exam likes to test is whether or not we're going to expense or capitalize intangible assets. In other words, is the cost of the intangible asset going to be reported in the income statement as an expense, or is the company going to capitalize it and add it to the balance sheet as a non-current asset? And the answer is it depends. All right, so we need to know 2 scenarios for the exam. We need to know about scenario number 1, which is if the intangible asset is internally developed, and scenario number 2, which is if the intangible asset is acquired. All right, so ultimately, we need to understand if the intangible assets are obtained by being created internally, right? Maybe we are the ones writing the song lyrics, in which case this is internally developed, or maybe we purchased it. Okay, so maybe music production company purchased JoJo the pop singer's song's intellectual property from her. Okay, so 2 questions to generally consider. Are these intangible assets going to be capitalized or expensed? And if they are capitalized, what is the amortization expense? Okay, so asking ourselves question number 1, is this going to be capitalized or expensed? How do we know? And the rule is if the intangible assets are internally generated, right, they are developed internally, we're always going to expense this. If the intangible assets are purchased or acquired, then we're going to capitalize the intangible assets and subsequently amortize them. All right, however, there are exceptions to this rule. Okay, so regardless of whether the intangible assets are internally developed or purchased, we're going to capitalize certain costs. Okay, so the following are costs that will be capitalized no matter what. And the big one is going to be legal fees associated with, and this is where it's important, the successful defense of intangible assets, right? Let's say that JoJo the pop singer wrote her own song, and that song has a copyright attached to it. And let's say that emo rock band is suing JoJo for infringing on what they think is their copyright. Okay, so JoJo is going to go out and hire a lawyer to defend her copyright that she thinks is related to her song. If the lawyer comes in and successfully defends the intangible assets lawsuit, then that legal cost is always going to be capitalized. Okay, so in your brain, think exception equals capitalize, and that's always going to be the successful defense of a legal suit. Very common, you're going to see this in the legal defense of a patent, for example. All right, some miscellaneous costs that are always going to be capitalized as well that might sneak up on you are going to be legal fees associated with the initial costs related to the intangible asset. Okay, so legal fees, registration costs, these initial costs associated with bringing the intangible asset to fruition is always going to be capitalized. Okay, so the biggest takeaway here is going to be the legal defense of a patent infringement suit. All right, if this is a successful defense, it's always going to be capitalized and amortized over the estimated useful life. If it is an unsuccessful defense, we're always going to expense it when it is incurred, meaning we're never capitalizing. All right, but what if we do acquire an intangible asset and we do end up capitalizing its cost? What costs would be capitalized? All right, so this is going to be the purchase price of the intangible asset. Any legal fees in the initial phases of the intangible asset will be capitalized. All costs needed to make the asset ready for its use, and any other incidental expenses will be capitalized if the intangible asset is purchased.